I'm looking at gold trading on Wednesday morning in Australia, and gold is at an all-time record high tonight in Australian dollar. Recently, it made all-time record highs in the euro and the British pound as well. So it's just the US dollar that we haven't made a record high in, but we will shortly. So you're talking about maybe gold being down 3.5% from its record high. The GDX, which is the big index of gold mining stocks, would have to rise 16.4% to get back to the high from before Trump was elected. 16.4%. Gold only has to rally about 4% to make a new record high. That just shows you how overdone the sell-off in gold mining stocks is.
Gold prices are expected to stay high, supported by heightened geopolitical tensions. Meanwhile, steady demand growth amid tight supplies is expected to support price increases for platinum and silver. The global gold market was valued at $276.04 billion in 2023. It is expected to grow from $291.68 billion in 2024 to $457.91 billion by 2032, recording a CAGR of 5.8% during the forecast period. In this video, economist and gold advocate Peter Schiff discusses gold's recent performance, noting it has hit records in currencies like the Australian dollar, euro, and British pound. However, US dollar records remain unmet, which he predicts will change soon. A stronger dollar has been a significant headwind for gold, making it pricier for key consumers in China and India. Together, these nations account for over half the global jewelry market. Gold's allure has taken a hit with a shift toward riskier assets like tech stocks. While reflecting on the market, Peter Schiff mentions the lag in gold mining stocks, noting the GDX index needs a 16.4% rise. He further attributed this to negative sentiment in the mining sector and points out that GDX remains at July levels despite gold being $300 higher. Gold miners lowered in morning trade on the ASX after gold dipped more than 1% on Thursday. Concurrently, Peter states that gold mining companies haven't fully benefited, citing Newmont Mining's challenges with high costs in Australia. He expects significant upside surprises in earnings and dividends, with most investors unprepared for this opportunity. Shares of Newmont have plummeted 18.3% over the past 3 months, lagging behind the iShares MSCI Global Gold Miners ETF's marginal returns over the same time frame. Based on current trends, Peter encouraged buying silver at current levels, emphasizing both metals as strong investment opportunities. Now, we present the clips of Peter Schiff's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Gold was about $27.50, so it was already off its highs when Trump won the election. So gold's now only down, less than $50 from where it was. And in fact, I'm looking at gold trading on Wednesday morning in Australia, and gold is at an all-time record high tonight in Australian dollars. And recently, it made all-time record highs in the euro and the British pound as well. So it's just the US dollar that we haven't made a record high in, but we will shortly. So you're talking about maybe gold being down 3.5% from its record high. Yet if you look at the gold stocks, look at the GDX, based on where it closed today, and it's been up the last couple of days because gold's, really moved. But the GDX, which is the big index of gold mining stocks, would have to rise 16.4% to get back to the high from before Trump was elected. 16.4%. Gold only has to rally about 4% to make a new record high. That just shows you how overdone the sell-off in gold mining stocks is, how negative the sentiment is. In fact, if you look at where the GDX is trading now, it's trading about where it was in July, when gold is well over $300 an ounce higher now than it was in July. So none of the increase in the price of gold has benefited the companies that mine it. And of course, they own a lot of gold in the ground. That's what they're mining. They're mining their own gold. In fact, if you remember when Newmont Mining had a big drop, it was because of higher than expected costs. And most of that was from an Australian mine. They bought out and Newcrest Mining in Australia, or here, maybe they bought them both, but there was some a higher cost. Well, costs are collapsing in Australia right now because the biggest cost for the mining company is the workers, the labor. When the Australian dollar is falling as the price of gold is rising, that's the best of all situations for gold mining companies. See, normally when the price of gold is going up, the dollar is going down. And so that would mean the Australian dollar is going up or the Canadian dollar is going up. And so that would increase their local costs. But when you have a situation where gold is rising and the dollar is also rising, if that can happen, which is rare, but it's been happening, that's actually better for gold mining companies than when the dollar is falling, because it means their profits are going to go up even more. So what's happened recently, and if you throw in cheap oil, and oil prices under $70 a barrel in dollar terms are very cheap. So oil in relation to gold is as cheap as it's ever been. This is great for the profits. So I know there has been some stumbling blocks. Companies have missed numbers, but I know that we are getting ready for some major upside surprises in earnings and dividends in these gold mining stocks, and nobody is positioned for that. So I really think people should be buying gold here at about $2,700. It's still a good price. Silver right about $32 an ounce. It held the $30 support level. As I've been saying on the podcast, I think $30 silver is like $2,000 gold was. That was the support that we rallied off of and went all the way up to almost 2,800 before we had a pullback on, Trump was the catalyst to get that and the dollar rally. We got a pullback in silver as well, but it held that $30 support level, and $32 is a cheap price. So,
according to the technical analysis, Peter Schiff disputed Trump's claim of no inflation, noting prices rose 8 to 9% during his presidency. He argues inflation surged to 7% in 2021 due to Trump-era policies like COVID-19 stimulus, handing Biden an inflation bomb rather than a stable economy. On November 5th, Trump was elected president. More than half of his voters said the economy was the most important issue driving their vote. Polling from YouGov conducted for The Economist found that 94% of Americans viewed inflation as important to their vote. President-elect Donald Trump's forthcoming agenda has raised concerns about the future path of inflation and whether the Fed will continue to cut rates. Though Trump has vowed to force prices down, in part by encouraging oil and gas drilling, some of his other campaign vows to impose massive taxes on imports, for example, and to deport millions of immigrants working illegally in the United States are widely seen as inflationary. Still, according to the CME FedWatch tool, Wall Street traders foresee a 98% likelihood of a third Fed rate cut next week. Fundamentally, Peter criticizes Trump's claim that tariffs are beautiful and cost consumers nothing, calling it ignorant. Let's get back to the interview.
So Trump claimed that when he was president, we had no inflation. No inflation. That's not true. Right? Prices rose maybe 8 or 9% over the 4 years that he was president. So that's not no inflation. I mean, even if prices are going up 2% a year, that's still 2% inflation. He didn't say we had 2% inflation. He said we had no inflation, zero. That's not true. But the bigger lie that he told, assuming he knows that it's not true, maybe he has no clue, in which case it's not a lie. He just has no idea what he's talking about. But he said that after he left office, inflation was so low, it took a year and a half, 2 years for it to rear its head, that there was no inflation for the first year or two after he left office. And that was his gift to Biden. And he blew it when inflation ran up. He's 100% wrong. The highest point for inflation of the Biden term was 2021. Biden took office in January of 2021. That's when Trump handed him the baton. 2021 was the worst year for CPI. It was up 7% immediately after Trump left. So Trump is trying to absolve himself of any responsibility for the inflation that immediately reared its head the minute he left office. Now, had Trump won, we would have still had that 7% inflation in 2021 because it was caused by the policies that were implemented before he left office, all the stimulus money from COVID. Now, 2022, Biden's second year, CPI was 6.5% during his second year. Right? So the first year was the worst year. The second year was the second worst year. Now, Trump is claiming that inflation didn't rear its head until Biden's third term, his third year. During his third year, 2023, The CPI only went up 3.4% that year. That was the lowest year of the three. So the opposite of what Trump claimed. He didn't hand Biden zero inflation. He handed him an inflation bomb that went off as soon as Biden got it. So it's just completely dishonest or disingenuous or wrong for Trump to say that there was no inflation for a year and a half or 2 years after he left office. That is completely false. And again, it shows Trump doesn't even understand inflation, that has no regard for what actually happened in the economy. I mean, maybe that's true. Maybe he just doesn't know anything, right? Maybe he just talks and he doesn't really know anything about what he's talking about, which may be the case. Now I want to get to his comments on tariffs, where he said tariffs are beautiful. He kept talking about beautiful tariffs, beautiful tariffs. And he said they don't cost consumers anything. How can that be? Can he be that ignorant? I mean, think about it. If tariffs really didn't cost countries anything, every country would just be imposing tariffs, right? If it doesn't cost your own people anything, why don't just run on tariffs, right? Why doesn't every country just impose tariffs if it doesn't cost anything for their own citizens, right? If you could just tax foreign countries, why not do that? Because they can't vote. It's preposterous. A tariff is a tax. It's a tax on the consumer for buying stuff. 100% of it is paid by consumers. There's nobody else to pay it, right? It's an indirect tax on consumers. How can Trump not know something so basic? And he still claims that nobody paid the tariffs that he enacted the first time, that we made a bunch of money on these tariffs. We didn't make a bunch of money. The government made money at the expense of the public who paid the tariffs. It's pure nonsense. Now, the reporter was saying, well, can you guarantee that the consumers won't pay? He's like, well, no, I mean, I can't guarantee that. I can't guarantee that there's going to be tomorrow. But he's basically saying, because I can't guarantee the sun's going to come up, right? So I can't guarantee. But he's basically saying, yeah, because I can't guarantee the sun's going to come up, I can't guarantee it.
This long-term approach involves holding a position over an extended period to profit from significant changes in gold miners and prices. Gold has been valued for its stability when the financial fires are raging. That stable nature was underscored in 2024 when its price shot upward, gaining over $700 per ounce. How do you see shifting market dynamics shaping the outlook for gold, silver, and the broader economy in 2025 and beyond? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.